Welcome to our comprehensive AUD/JPY analysis, covering October 6th through 11th, 2025. This week saw dramatic volatility in the Australian dollar-Japanese yen pair, with a surge to 10-month highs, followed by a sharp reversal. We'll examine the key technical patterns, fundamental drivers, and provide actionable trading strategies for both short-term and medium-term traders. This analysis is prepared on October 13th, 2025, and incorporates the latest market developments and geopolitical factors affecting this currency pair. AUD JPY currently trades at 98.230, down from the weekly high of 100.591, reached on October 9th. This represents a significant 2.36% decline from the peak. The pair remains up an impressive 15.56% year-to-date, reflecting the broader strength in the Australian dollar throughout 2025. The weekly low came in at 98.633, establishing a critical support zone. The 100.591 level marks the highest point since January 2025, making it a key resistance level going forward. This sharp reversal from the highs signals potential exhaustion of the uptrend. From a technical perspective, the RSI indicator stands at 50.86, indicating neutral momentum after the recent pullback. The MACD has turned negative at -0.54, confirming bearish divergence. The classic pivot point sits at 97.441, with immediate support at 96.455 and 95.073. Resistance levels are found at 98.823 and 99.809. The most significant technical development is the large bearish pin bar formation on the weekly chart. This pattern, closing at the low of its range after reaching 100.591, typically signals near-term weakness and potential trend exhaustion at major resistance. Four major events shaped AUD/JPY's volatile week. First, Sanae Takaichi's victory in the LDP leadership race on October 5th to 6th slammed the yen lower, cooling Bank of Japan rate hike expectations. Second, the Australian dollar surged to a 10-month high of 100.591 on October 8th, driven by strong risk appetite. Third, former President Trump's threat of 100% tariffs on Chinese imports on October 9th to 10th triggered a sharp reversal. Finally, the bearish pin bar formed as the pair fell 2.4% from peak to 98.63, reflecting risk-off sentiment and concerns about Australia's China-dependent economy. Our short-term outlook carries a bearish bias, with 60% probability for the base case. We expect the pair to drift lower toward the 97.50 to 97.00 support zone, with potential consolidation if support holds. The expected trading range is 96.50 to 99.50. There's a 25% probability of a more bearish scenario, where a break below 97.00 on negative trade news accelerates downside to 96.50 or even 96.00. A bullish case with 15% probability exists if positive trade news drives recovery toward 99.50 to 100.00, though the bearish pin bar makes this less likely. Critical resistance stands at 99.00 to 99.50, while key support is at 97.00 to 97.50. The medium-term outlook heavily depends on US-China trade developments. We see three scenarios. First, a 40% probability that trade tensions ease, with Trump and Xi reaching a compromise. This would drive AUD/JPY to 102.00 to 103.00 as risk sentiment improves. Second, a 35% probability of prolonged uncertainty, where the November 1st deadline passes without resolution, resulting in range-bound trading between 96.50 and 99.50 with elevated volatility. Third, a 25% probability of trade war escalation with full tariff implementation and Chinese retaliation, potentially driving the pair down to 95.00 to 96.00. Monitor US-China negotiations, Bank of Japan policy, and Australian and Chinese economic data closely. For short-term traders, we recommend a bearish strategy. Short on rallies between 98.80 to 99.20, with stops above 99.80 and targets at 97.50 and 97.00, offering a 1-to-2 to 1-to-3 risk-reward ratio. Alternatively, employ range trading. Buy at 97.50 to 98.00, sell at 99.00 to 99.50, with stops below 97.00 and above 100.00. For medium-term traders, wait for trade clarity before taking large positions. Long-term bulls should buy dips at 96.50 to 97.00, with stops below 95.50, targeting 102.00 to 103.00 over 2 to 3 months. Consider hedging with put options at 96.00 to 97.00 strikes and reduce position sizes to 50 to 75% of normal until geopolitical uncertainty clears. In conclusion, we maintain a short-term bearish bias following the large bearish pin bar at 10-month highs. The medium-term outlook is heavily dependent on US-China trade negotiations and the November 1st tariff deadline. We expect a trading range of 96.50 to 99.50 in the short term, with potential for breakout on trade news clarity. Risk management is crucial given elevated volatility and geopolitical uncertainty. Use conservative position sizing. Long-term bulls should wait for a clearer trade picture and buy dips at the 96.50 to 97.00 support zone. Watch 97.00 support and 99.50 resistance as critical levels. Stay cautious and monitor developments closely. Thank you for watching.